What's happening in the markets? Why did the Fed meeting, despite raising rates, not crash the markets? Why are the markets still up? Let's dive in. Let me just make sure that this thing doesn't scratch like last time on the shirt. Let's dive in. Happy 6th week of 2023. I sent out a newsletter yesterday about things I'm watching in the upcoming week. If you want that newsletter, go to ceonews.cakedefi.com, sign up, and I'm going to be sending you regular market updates, things I'm watching from a CEO perspective, but obviously as a personal investor. I put in one or the other personal thought in there, so if you want to get some value out of this, sign up. Let's dive in. Let's first talk about what happened last week and then discuss what I'm expecting for this week. First and foremost, I think a couple of key things last week. I think in the crypto space, it was relatively quiet other than the entire ordinal topic on Bitcoin. Let me know if you want to hear my thoughts on that in a separate video, explaining what these ordinals are, how they work, and NFTs on Bitcoin. Obviously, the big uproar there is the Bitcoin maxis who are trying to fight that, and obviously some of the game theoretical issues, not only from like who pays more fees, because these ordinals really demand quite some fees. Also a bit on regulation, what happens if child pornography gets stored in there. So obviously this was a hefty topic. My thought on this is anything that brings utility to Bitcoin is good. As you know, I'm a big critic of the lack of utility in Bitcoin. For me, Bitcoin has this utility as simply being an index for the crypto space. That's why we are investing from a company standpoint in Bitcoin. And it has the ability of being an insurance, in my opinion. And that's why I personally have a little bit of my allocation in Bitcoin. But that's it. I don't see it as a currency. I don't see it as a world currency. I don't see this at all. So for me, these are all things that I know a lot of people just kind of try to hype it around. But to me, that's the same thing as when people say, oh, it's inflation protection. Oh, it's the next world currency. I don't know. It's always something, right? And at the end, all these things just simply are not true, in my opinion, at least. So that was a big crypto topic. We didn't see any escalation in crypto other than that. Nothing in Genesis. Everything kind of quiet there. Binance, Silvergate, all these things really, really more on the quiet side. So it was macro. On the one hand, it was the Fed. Wednesday, they came out with 0.25% interest rate hike, up to 4.75%. This was all expected. The ECB, European Central Bank, raised by 0.5% to 3%. The Bank of England, 0.5% to 4%. Actually, we're seeing this, and I send this out in the newsletter. We see this all around the world. All central banks are raising interest rates. All of it very expected. Now, what was unexpected was Jay Powell actually saying two things. Jerome Powell is the head of the Fed, and what was unexpected, two things. First of all, that he sees disinflation. What was unexpected about this, not that he sees that, but that he says it. Why? Because he has been very hawkish. Hawkish means he was very bearish and careful so far. And for the first time, there was a meeting where he was more on the bullish side. He was more dovish. And so the question on this is, why is that? And I think, obviously, because the Fed is reactionary. It's not proactive. It has to kind of follow data. It cannot anticipate. So he needs to raise rates based on what's happening in the markets, but I think his signaling can be a bit about what he's expecting. And this disinflation, so inflation coming down, I think that is expected. And we're seeing this all around. So I think that's where a lot of this is coming from. The other thing is that he said they're not expected to lower rates the entire rest of the year. So he expects 1 to 2 more rate hikes. I think he said 2, but the market kind of prices in 1. So I'm saying 1 to 2. But they're not expected to lower rates. And the only reason the Fed would lower rates would be because there's a recession, and that recession is really, really hard, or because the bond market is kind of blowing up, or because inflation is so low that he doesn't need to keep the rates high. These are the only 3 reasons. And so since the bond market has been holding up really well, it's unlikely that these slow rate hikes right now are going to cause issues. It's actually very, very unlikely. And that kind of also shows you, I mean, maybe that's a key point. How many of gurus, experts, a year ago said the Fed cannot raise interest rates more than like over 2%. It's impossible. The bond market is not gonna be able to handle it. Well, bond market is completely fine. So key thing is always like these macro experts, a lot of these gurus that have their favorite investors, right? Investments and so on. They're always trying to paint the narrative. So you have to be so careful if you kind of think, oh, you know what, like rates are not going to go over 2%. Now we're close to 5%. Everything is fine. So be just extra careful. So bond market, in my opinion, is going to hold this. No issue on that. Inflation will go down, sure. The question is just how fast. I do think we're going to see it go down, go up a bit, go down, go up a bit. The key thing why they are not saying that they're going to lower interest rates, in my opinion, is because Powell is fairly sure that they are not going to see a hard landing. They're not going to see a recession. And a recession simply means a shrinking economy. And so he's fairly certain about that. And I mean, he could be. I'm not saying he's wrong. I'm just saying he could be right. Also, it could just be that he's signaling, right? So could be that he's just doing some signaling there. The market took everything up very positively. And I'm going to give you a bit of my thoughts going forward on that. So yeah, quite interesting. The 3A companies plus Meta came out. In my opinion, their earnings were relatively abysmal. Some of the worst earnings they've had or reportings they've had in a long time. And especially because the slowing growth. It's not so much about the absolutes here. A lot about growth companies or tech and so on is really about the signaling in general. And to be honest, that was not very optimistic. If you look at the fundamentals there, nothing of that was like screaming optimism. Everything was screaming pessimism, some of the slowest growth they've had in their history. So I don't know. I don't understand how the market is so like optimistic about all that. Is this now the end is near kind of scenario? Absolutely not. But it's definitely not what some people are saying. Oh, we're through all this. Now we're going to see the V-shaped recovery. And it feels like that's what people are expecting, to be honest. And I don't see that at all. So Meta rallied massively. The reason it did was because Zuckerberg seems to be really focusing on becoming more efficient, moving away from the pure metaverse, which I think if you have seen our meetup last week on Wednesday, we posted this on the Cake Company YouTube channel. I'm not a big fan of the metaverse. I just don't see the utility in that at all. And I mean, it's not only me, it's people. Otherwise, more people would spend time in there, and they don't. So, I just don't see much utility in that. So Meta is going away from that, so I think that's the right move, to be honest. And last but not least, we had unemployment numbers, and they are seeing a 60-year low, I think 60-year or 50-year, 50 to 60-year low, extreme low. And people are seeing this as the economy is super healthy. Now, what we may actually see, and that's an interesting one, is a bit of a rotation. If you look at the data, you actually see that tech companies are firing, where the general economy, anything, and I mean, we see this, right? You go out there and you go to a restaurant, depends on where you live, right? But most restaurants, most hotels, they're struggling hiring people. And then you have tech companies who are all letting people go. The problem is going to be that a lot of these tech people are not going to be able to work, or they don't want to work in restaurants, or they don't want to work in that space. So it's going to be a very interesting kind of like question going forward. So it may actually be that we don't see a lot of that reflected in the data on how people actually going to feel from a sentiment standpoint. So I just thought that was quite interesting. So looking at all that, we actually have a very quiet week ahead. I'm not expecting any fundamental action in crypto. That doesn't mean prices cannot move, because I cannot predict the price. I can only look into what's expected to happen. And we don't have any fundamental action in the general markets. So it should be a relatively quiet week. However, it could be now, February tends to be a bit more bearish if January was so bullish. So could easily be that we're going to see a reaction this month to the strong months last month. And it's actually more likely to see a red month this month in comparison to this super strong monthly candle last month. which was one of the strongest months in the entire Bitcoin history, especially in January. So I do see some counter there and some potential reaction. But fundamentally, there shouldn't be much. Also, I only see two reasons why prices are up. First, because we were all too pessimistic in December. Could be. I don't think so, because I still don't see where all this hopium and all this bullish sentiment is now coming from. But also, to be frank, whether we are at 17,000 or at 23,000, I mean, we're talking about 20% or 30% up or down at these prices. I mean, it's just too emotional, too volatile. But also, meme stocks been rallying like crazy, and so that could be that there's just too much hopium, too much euphoria in the market. Could be. And yeah, or we're just basically actually going back down to levels below where we kind of started from the year, and we're going back under 20,000. Not seeing for now lower lows unless we really see some catalyst in the crypto space or in the general markets. In the general markets, I don't see that catalyst right now, because everything in the general markets right now looks quite constructive. It's not good, don't get me wrong, but it's not as like, oh, we're dying tomorrow. In the crypto space, it would just need Grayscale to blow up, or it would just need one of these to blow up, and yeah, we're back to a new low. And I think people really underestimate that. So for now, it all looks good. Fingers crossed there's nothing better for the market to have a bit of this constructive kind of movement. Prices are up, Bitcoin is doing well, Ethereum's doing well, DeFi chain is doing well, so all is doing well. So I think everyone's super happy around this. So let's hope it stays that way. With that, I'm off to meet my co-founder Julian, and yeah, plan the week out. Looking forward. I'll shoot you another video later this week. Stay healthy, stay safe. I hope you're having a good start into this week. Yours truly, Julian. Bye-bye.